Essar Steel has requested banks to cut its onerous interest rate outgo load by converting 9,000 crores of its 40,000 crore debt into preference shares, and these will be redeemable after 12 to 18 years. They also want 3,200 crores to be converted into equity and lower interest rates on the balance principal amount. Latha Venkatesh is here with all the details. Latha, what more can you tell us?
Has been speaking with bankers for the better part of past 10 months. The bankers were trying a 525, that is rolling out a part of the loan into a 25-year period, as well probably the SDR, which is a strategic debt restructuring, finding a new owner. But it looks like none of those have worked so far. So Essar Steel has come with this proposal that out of its 30,000 crore principal, or 31,000 crore, 9,000 crore should be laid out over the next 12, 18 years. Essar will return it again as 9,000 crores because they would be converted into redeemable preference shares. Preference shares bear hardly any interest, 0.01%. So basically no interest. We will return it as is, 9,000 crores after 12 or 18 years, basically in 3 tranches. Also, they want another 3,200 crore of their debt converted into equity, which means they get a relief of about 12,000 crores, plus another 400 crore of penal interest to be written off, which means 12,500 crore of relief. How does the loan get larger? Working capital. Separate from this 31,000 crore principal, Essar had working capital loans. They want, that used to be cash credit limits rolling. They wanted to be converted into a term loan of 6,000 crore and add another 2,000 crore because they will take over the Orissa slurry pipeline as a part of their own company. So the term loan will now rise to 40,000 crore, 40,500 from the original 31,000. But if you subtract the preference shares and the debt converted into equity, the balance loan will be 27,900, or basically 28,000 crores. How will they service it? They want a 20-year term to repay that amount with an interest of 9.8% for the first 3 years, which means basically cut down interest considerably. And after 3 years, they will reset depending on the market rates. Also, they have a separate 212 crore of dollar loans, dollar notes they are called. They will meet 25%, that is 53 crore they will pay up, and the remaining should again be counted along with the remaining reserves. What will Essar bring to the table? The promoters are ready to bring 1,500 crore by way of equity. As well, they have intercorporate loans of about 2,850. They are ready to convert that into equity. So the equity really rises, and that will be a slightly more manageable debt-equity ratio.
Right, Latha, thank you so much for joining us with all those details. So there you have it, Essar making a new pitch to its lenders.